The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome all to another gorgeous day at the headquarters of technical trading and investing. This is TFNN.com. And we've got quite a day out here today. S&P is off about 4 points. Not a lot of interest yet. 1.85 billion shares on the consolidated New York Stock Exchange tape. I suspected that we were probably going to go a little bit higher, but probably no significant move till about 2 or 3 o'clock tomorrow. We are in options expiration, and they're going to try to push it up a little bit, going to try to push it down a little bit. Probably that will continue into late afternoon tomorrow, at which time the market will regain its regularly scheduled program and direction. I think the first stop we have down below is about 1620, and we'll be looking for that, I think, this week. Too many people freaked out about a few things. One is India stock market continues to get hammered, and the treasury, the amount of treasuries being sold, and is just it's back to 2007 levels. And if traders are talking about two things, it is the weakness in Asia and where that money is going in treasuries. So it is going to be an interesting week, I think, but probably the big move, I suspect, will not be until Wednesday. But we will continue looking for signs of life, maybe a heartbeat in this market. And what we do know, though, is today in the during the War of 1812, the U.S. Navy frigate Constitution defeated the British frigate Terry in a furious engagement off the coast of Nova Scotia. Witnesses claim that the British shot merely bounced off the Constitution's sides if the ship was made of iron rather than wood. Of course, that ship still exists and comes into Tampa Bay quite regularly. I've been on it, I think, several times down in St. Pete Harbor. But they basically cut down trees and had 12 inches of wood. Was it double that? 24 inches of oak, of the old growth oak that you can't even find anymore on the sides of that ship. It made some nice dimples on the side, but that was about it. And, of course, the success of the U.S. Constitution against the supposedly invincible Royal Navy proved a tremendous boost in the morale for the young American Republic, and also pretty much got the British to eventually give up. Of course, not much later on, people were starting to bolt iron and copper plating to the side, some of the other things to get done, but Old Ironside earned its name and served us well in the Battle of 1812, kicking the English out one more time and let them go have their fish and chips. So what else do we have going on in this market? We talked a little bit about last Thursday's gold move, and I probably should have said something at the time. But there is something called on the floors of the New York Stock Exchange tape, or Stock Exchange itself, and also in trading circles around the globe, even on the options exchange in Chicago, and that is known as a firing for effect. If you want to move a market, you buy all at one time. If you want to get into a market, sneak into a market, you buy slowly and quietly, not trying to put the price up that you're buying at. When we saw a huge back-to-back 5,000 contract buys in the gold market. I suspect at least several people suspected that there were a lot of people on the wrong side of the gold move, and decided to engineer a huge short squeeze in the gold market. Of course, today we're off about $5.70. I suspect pretty much all the people that had been short probably spooked out of this market. One of the things that can do is mean that there aren't as many natural buyers back on the way down. I thought we were probably in some kind of trading range from about $12.75 to $13.40. So we're only about $25 above that, but I think we could probably come back to that $13.40 and maybe even $12.75 range again. In that most of this move, I suspect, was a huge short squeeze. Long term, I think gold is fine. But I think probably you've gotten the lion's share if you were buying gold off the lows at that 1,200. Probably about 1340 would be all you can would have been able to suspect, and being able to get 1375 or 1379, whatever the high was. Probably if you didn't take that, I think probably you were a little piggy on that trade. If you were talking about an investment, you probably can hold those 1,200 gold buys for a very long time. But I think maybe we've seen the bottoming process start out here, and I'd love for this thing to come back to the 1275 range one more time and drive a lot of bulls insane, but at the same time wash out probably the easy money that was made on this that hasn't already rung the register or is playing for a much longer time frame. Anyway, firing for effect is just that, and when you see people do that intraday, it isn't because they are not trying to advertise them buying things up. Carl Icahn, just on the other side, was quietly buying up all kinds of stuff, and then it came out much later, and of course said that he had huge purchases in the stock. That makes me think that we've got somebody that probably may be ready to buy also, but not so much engineering a short squeeze as a long-term operation on a stock. Of course, today he's out pushing Chesapeake, CHK, and he already had a position in this. Let me actually get up here. CHK. He has been pushing this and been in at a lower price, but even his blurb today really didn't do much but open it up probably at pretty much at the highs today. So not a whole lot in this, which is kind of be interesting. The question is when. Nobody, even Carl Icahn, is going to win every single time. And, of course, he's made a lot of hay, HLF, out of running a short squeeze on Herbalife. Today, this was down fairly extensively. What was the low out here? 60 and something. Low was $60.51. Word came out today that the largest distributor that they have of their products committed suicide, and kind of interesting that he did. That it's not for a lot of retail sales operations. Suicide is a higher risk. A lot of people have and believe that their worth is invested in the company when they get in these, whether it's a single company or a multi-level company like Herbalife. But it's not uncommon to see people that build a company and then find out that maybe there was something in their personal life that they were really looking for when they get despondent. So a lot of people saying that maybe the top is in finally in Herbalife, and to this, at least at the moment, doesn't look like there's a lot of impetus to push this stock very much higher. Let's see, what else do we have here? Let me get to it. There are a few other things I wanted to look at. There's a list of them next year. Intel was upgraded. It's getting awful close to support level. INTC. Take a quick look at that. Did a pop-up today, but on an upgrade. But it was getting awful close to some support levels. But I suspect we saw 2189. I think we still can see 2150 out of this thing as the markets continue to pull back and go lower. Yeah, just checking out there. Yeah, 1652 on the S&P cash. I suspect we probably close at 1655 again today, and probably try to push up through 1665 tomorrow, and then that probably is the top. And then we're probably going to be headed back down to the 1620 level. What else do we have out here? CIE. Okay. Provided an update. This is one of this all or nothing companies. Cobalt International is CIE. I'm going to sneeze here. There's nothing like air conditioning down here in Florida, is there? Anyway, down fairly strongly today. And what do we find out about this? It's a development stage company, operates independent oil-focused or exploration and production company. But basically, they said the wells were dry, and that was enough to hammer them down to a low today of 2493 monster volume. You've got a low just a little lower, 2465, and I suspect we're probably going to hit that today or tomorrow. And with the energy this thing does have back down here, probably look for this thing into the 22s fairly soon. Of course, we've got Cisco is another major mover in this market. It also was down at the bottom of its trading range since it came out with earnings. And that's going to be, we've had about 3 days down here at this range. I suspect, like I said, probably going to take till Wednesday before we get a little bit more pullback. And you're going to have pretty good support coming back in at about the $23 level. At that point, want to actually see how much volume is in the stock right now. Not so much, and it will be interesting. But let me get me the full information on CIE here. Just 1 second. Why doesn't it show? Yeah, just no oil found in the Gulf of Mexico well, and it shares falls. So there's nothing more than that right there. Okay, we'll be back in a minute. Give me a call, 877-927-6648. That's 877-927-6648.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we've got Brent from Martinez, California. How are you doing today, Brent?
I'm doing good. How are you doing, Dave?
Fantastic. So we're looking at GameStop. GameStop is a company that sells and resells used games for things like Wii and PlayStation and Xbox. And what are you thinking about doing with this?
Well, it looks to me like it completed a AB equals CD pattern up around 51.
Mm-hmm.
It looked like the C to D leg was at 1.272. That's a high volume low that hasn't been tested, so I'm thinking about shorting the thing. I know that has high short interest is only negative on the thing. So.
Yeah, I think you got it good. We've been talking about Confluence. I don't know if you've been listening to the show lately, the last few days, or at least since last Wednesday. But
yeah,
there
I
are a few.
I just listened to the webinar too on part of the charts.
So here's the one where I'm looking at in this to fire up, and this is going to be, I think, an okay trade for you. But I pretty much suspect that the trade that we're actually looking at here. Let me get this a little bit. That's got to be the trade right there, which is going to set up a confluence level of about 38.74 to 39.57. You also have some gaps there. On the 9-day moving average, you pretty much have a great double repo pattern. You've got two dojis here. Are you looking at options or are you looking at the equity?
I was going to do options. I was going to, they are having their earnings come out on Thursday.
This Thursday?
Yep.
Okay. Yeah, you're probably going to have to pay too much to get into them now. Did you look at them already?
The September. I was going to go out the money a bit myself because I figure if it's going to do what I want, then it's going to make that move. I was looking at the September 40s are like 50 cents. So I didn't think that was too bad.
Yeah, it's probably not too bad, but unfortunately they're probably going to be about worth what? If the thing does crater, that's right where it's going to go to, so they'll be worth about $2.50. I just wish there was some better way of playing. What do the 45s look like?
I'd have to check the price. Maybe you can look. I can't look right now. But
that's fine. I'll go ahead and pull them up. You're talking about September's, though, right?
Yes.
Okay.
It just seemed like it had a lot of stuff in place. A lot of criteria is being met to short the thing. So.
I mean, everything in here screams to me that this thing is going to be toast long term. And basically, what they did was got a lot of people short. Ran that short squeeze, got it up here, and they're going to be loving distributing it all the way back down. But I don't think – it's just hard for me to believe that there's going to be long-term a need for this company. Short-term, can they get through the end of the year? Maybe. But I still suspect that all these game companies are going to go to a store much like an app store like Apple or Google Play or something like that. It's very hard for me to believe that they're going to be able to continue actually packaging software to send into stores and then get resold, that kind of thing. So I have a pretty sneaking sensation this is not going to last a whole lot longer. But it's just like the GPS companies like Magellan and some of the others who are super hot. You could tell that other companies were getting into that space and the chips in the phone, and so they're probably long-term don't have a huge move, but they had one last dance in them, and that was selling software to aviation to replace the books in there and the charts. And so they made some money and kind of had one big run, but that wasn't something that lasted. I like to play on 45s right now. You're going to be like $1.60 to $1.70, $1.80, and that's going to get you $5 more on the way down.
Yeah.
So sure. I can see that, but you're probably I'd have to look at the risk reward for a little while, but I'd almost think something like the 45s or even 44s would be better than the 40s because I suspect that it's going to go right to it, and they're going to suck all the premium out of them that day, and you're probably best going to get 4 to 1, and it's got to go $8-9. So I'd probably want to have something that had a little bit more go to it, and that would probably be the 45s because then you've got you're probably still going to have $1 in premium if it doesn't work. Okay.
Okay. All right,
I just think maybe a little higher on that scale there. Anyway, we'll be back with Robert in Chicago about Whole Foods when we come back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we've got another caller on the line we're going to get to in just one second. Wanted to bring up something someone had in the den, and that is Oda, one of our senior traders in the den. Had a good idea, and that is that you could also do a 45-50 call spread, and that would get you about a 240, 250 credit, and your risk is about 1-to-1. So pretty interesting. Of course, earnings were on Thursday. His other thought in that was that you could get a weekly options if you wanted them for Friday, but that's another one. The other thing is that the expected move from the premium in it is showing that maybe about $3 off on earnings, and I kind of just eyeballed it, but that's kind of why I wanted those 45s to at least get you to that point. I suspect this is going back to that 38.74 to 39.45, and I don't know. I probably wouldn't mind holding the Septembers if it doesn't all come off at one time. But I think you have a pretty good shot at that level. You've got a nice gap there. You've got the last decent volume spike as a high at 41.37. So that's probably going to get you back into that candle and into that area. We're going to Robert in Chicago. How you doing, Robert?
Hey, David. Thanks for taking my call. I want to congratulate you about I called you about 3 weeks ago, regarding Whole Foods. You thought it might come back, and I was wondering if you can look at it now.
Yeah, I still looks like it's going to come back to this gap level at about $50. I think you might get a few bounces out of this thing, but everything, everything looked fairly decent on this. It had a nice run up. You pretty much had everything. Once this thing broke the 9-day, which would be the same as the 3x3 on this side, it's been nothing but down. Probably going to go sideways for a little bit. I think it's probably a good chance this thing's going to $50. What were you thinking about doing with it?
No, I was wondering. I was thinking about buying it back at 50, but it's pulled back recently from around 56.18ish, and I was wondering what your power law vector shows on this pullback from there.
On the shorter time frame, you got, if you're watching on Tiger TV or in the den, you got this real mushy kind of $50, 50.67 to 52.58 confluence zone, which is going to be big and mushy. And that's probably going to take the energy out of it. I'd still want to look at this thing to come into about $50 with a whole lot less volume than 3.6 million shares. The energy isn't that much. It's going to be about the same coming up here. But, you had your first test back here on June 6th at 49.95. If this thing comes back with lighter volume back to that area, you're probably going to get only a day or so before this thing pops back up into the $52 range. So if you can see it hit $50 on like 1.8 million shares, I'd probably be a buyer of this thing. And it's probably in some kind of longer consolidation range between the upper part of this gap, which could go as low as 49 and $56. So not so bad looking so far. The energy is a little bit more coming back down, but it's not surprising because you had that huge move up from 40 to 53. And, all the energy came in that. So it's going to take a while to consolidate out. Not a really big deal. Energy up from this last leg to the next down leg. It's probably going to be just about the same. I think both of them are going to, just looking at it and eyeballing it, it's probably going to be 2.8 on the way back down once it gets back down there.
Wonderful. Thanks, David.
Okay. Yeah. Nothing in here to say that there's long-term damage in the stock yet. But it would be interesting. So what else do we have moving out here today? Let's go back to get a few of my windows closed today. To stock quotes. Oh, I wanted to look at is that right? What do we have here? Home builders. Wanted to see how these things. We talked a little bit about. I guess Robert brought it up, the webinar, and this was the sector that I was really looking at last Wednesday night. And they've been up fairly strong. Of course, we're seeing these things pull back just as strong today, and that is what we were looking for. A lot of these things to bounce back up to confluence levels and then turn right around. And I suspect if we dig through some of these, that's exactly what's going to happen. Of course, the more of that money that gets pulled out of treasuries at the alarming rate that it is or was getting pulled out up through last week by foreign investors has really spooked the market. And we've got to probably still see some of that. But, of course, we had like KBH up 5% one day. So let's start looking at a couple of these real quick and see. And, these, like I said, it's for those that weren't in the webinar last Wednesday night, I was really saying that with these ABC downs in a lot of different stocks, gold and housing, it's going to be real interesting to watch where these things pop. And I suspected that they were going to be very close to these confluence ranges. This one didn't quite make it, but it wasn't much farther. 1845 was the bottom of the confluence range in this. But you basically have one day, you had all the volume in it. Now you're pulling back, and you're going to see how these things start to base out around that 1557 label, August 15th low on KBH. Wanted to look at Ryland quick also, RYL. And see, Ryland's down, what, almost 5% also. These things did kind of pop, but had been in pretty significant ABC down formats. And we were looking in the webinar about the expansions in these. If we go back up to the higher expansion, which started at $50, you can see that we came right into the bottom of them on stocks like Ryland. So you have completed your one-to-one ABC down, and that's why I'm looking at a lot of these popping back up. Of course, we've got low volume today. You'd probably look for this thing for a 3304 low. I don't think I'd be buying this. If you're hyper-aggressive on housing and think maybe this is all a smokescreen, you certainly could look at it. But like I said, you really don't have a huge range up here for buying these things before you get into what's going to be significant resistance. That's $38.87 to $39.68. Is that right? Yeah. So we've got, you've got 33, 39, probably not a bad $5 trade, but this would probably just be a automatic rally in a bounce. And when these things do turn around, if 3304 is the low, you're probably going to look at that range right in there on most of these as they do a bounce. Didn't look at Toll Brothers. Toll Brothers a little higher ended, but the same thing. Almost all these stocks you've got fairly nice ranges. This one basically just retesting its last major low at $31.31 on June 21st, then coming in kind of going through that on lighter volume on August 15th. So if you get back down here and we actually do start rallying, this one's got about, what, $30 up to 33, 31 to 33, 63. So I'll be watching a lot of these to see exactly where these things come in. But just be very wary that there is going to be very good confluence levels. Confluence levels are where two different Fibonacci ratios come into agreement. The largest ratio that we use, the 618, to the lowest one, the 382, and those form a little range out there when they are set up correctly, and those are where we're really going to be seeing the battles fought. If we see the Fed step back in or talk down easing, maybe we'll have that. But I think even then, the outflows in treasuries are significant. I don't think they're going to stop anytime soon. Again, you can give me a call like Robert and Brent did at 877-927-6648. But I think as far as the stocks out here that I'm interested in, housing probably has a lot to tell us if we do get some kind of bounce. These were, you got awful close to this in the high on Friday in tolls. And the high on that was 33.30. So you basically had one more penny up on that, and that's generally how these things work when they're this narrow and they are set up in this kind of time frame. Just very nice. We're going to go to Victor in New Jersey. How are you doing today, Victor?
Yeah, I'm doing good there. What do you think of that Intel thing? Does it look good or not?
It looks good. Again, like all these stocks that have ABC downs, your expected return is going to be a little tough. I'm thinking we got. I think. Oh my word! Little Vixen in there is decided to go after Diablo. Hang on, just 1 second. Hey, stop it! We have to interrupt this program for a Spot announcement. Thank you, Spot. Anyway, we've got.
You have TXN trading at 38, right? And
yeah.
Intel's at 23. Where do you think Intel's going? It gapped up today. Does it have to close that little gap or not?
I think it's just going up there. Are you watching on Tiger TV by chance?
No, I'm going to do it tonight, though. No, I'm saying
okay. Well, the reason I'm going to say that is this thing's got a confluence level of 1 penny. Okay? You're going to come right into the $23.46, and this thing is right at that same gap. This thing's going to have a monster resistance, but I think you get 2150 is probably the next opportunity to buy this thing. and maybe that'll open up this confluence range a little bit. But if yesterday or Friday was the low, this thing's going to probably come up to 23.45 and hit a brick wall, just like we saw in Toll Brothers when we went to that one. So when you're watching, go ahead.
Doesn't today have something to do with option expiration too? To get the heavy volume today and tomorrow, and then Wednesday it starts trading normal again.
Options rollover really doesn't give you high volume. It gives you volatility. They'll buy and sell and buy and sell. It's like chumming the waters. They need to push it up.
So my downside risk is basically $1.08 in dividends it pays.
Yeah, you wouldn't want to probably chase this much more down than 21.50. If it goes below 21.50, you're going to $20.
I keep on hearing all their meetings are coming out, like their seminars and their new chips are coming out and all this, and that's the time to buy.
I think it's a fantastic company. I think they got a fantastic future. The only question is buying this thing right. And right now the market is pulling back, and normally it doesn't matter how great it is. What are we off right now? Let me.
But why is Texas Industries trading at 38? That stock I don't get.
To say that again.
Texas Industries, TXN, Texas Industries.
Yeah.
They're trading like super high, $38. That company sucks.
Yeah. There's a lot of people that believe the PC's dead. I just think that they're going to find other places, and I don't have a bad problem. I just think that you've got that 2350 area, and that's, you're probably not got the first shot out of the gun out of this is not going to take you back up to 25 or 25.98. It's probably going to meander around this area and bounce back and forth between probably 22 and 23.5 until it gets enough energy to break through. Once you got 24, you'll get back to 26, and then I think probably, a year from now, probably got 30, 32 out of it.
So you're saying it's a good time to buy right now, or if we're going down, don't touch it.
21.50 is where I'd be looking.
Yeah,
okay, so if it's got light volume, I just can't see jumping in right now with the market really looking like it wants to go to 1620 on the S&P cash. So I'd look at 1620 on the S&P cash. This thing's, between now and then, how does it hold up? Does it get down to 2150 and test it real nice? But there's a lot of congestion at about that 2150 level, and I suspect we'll get the answer of whether you want to buy it in that level, but probably not today.
Okay, great. Thanks.
Okay, thanks. Got some questions. We got Ron from Denver. How you doing, Ron?
How you doing there, sir?
Apparently, very well. Business is picking up.
Well, first of all, my compliments to you, because you said it would go to the S&P would go to 50, 55, and you were right on.
On what you mean for expiration?
Yes.
I was actually a little high. I thought it was 60 to 65. I was really surprised that it actually even came down another $5 below that, because normally the bias is bullish on it. So,
but the thing was $25, $30 higher when you said it. So.
Yeah. No, I was good. I was just. My comment is that I think the market's even a little weaker than I thought it might be.
Yeah.
Because it did go lower. But go ahead.
I did some FAZs on the financial index and made some money and got out Friday. My question is that I think that's the easy money. Could I get back into those? Do you think the
FAZs?
Financials. FAZs and Zebra.
We'll talk about that on the other side of the break, hopefully.
Thank you.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, we're looking at FAZ, and let me get another look at here. I guess the question, Ron, was, can you get back into it?
Yeah,
and I probably wouldn't here because the risk reward restarts all over. You already sold it, right?
Yes.
Yeah. I mean, this is why I've been talking about confluence levels so hard the last 2 weeks, 10 days, whether it's all these stocks. But if these stocks have been making good ABC downs like this one has, or the pattern has been fairly decent ABCs in it, you're going to have some confluence zones, and you want to look at those first. So if you were in this thing at 3160 today, you've got to make your risk reward work to 34.13, because I think that's about the biggest bounce you're going to get out of this. So You've got about $3 up. You've got this gap down with high volume that takes you to about 30. Boy, I mean, I think it's good.
Easy money's been made.
Yeah. You got the problem is you want a 3-to-1, and it's just hard. You can kind of get it, but I just don't see the start of Confluence starts at 33.73, and all these stocks that I've seen that came up to Confluence when it's been very nice and tight like these, this one runs from 33.73 to 34.13. All of these on these bounces have come right to the lowest or lower level, the first Confluence number, and stopped. I mean, on the penny or just a few. So you're looking at 33.73 is where you'd want to get out of this thing. And, you probably couldn't hold more than $30, $30.50 as a stop. So it'd be kind of tough. I think there's better trades out here, too. So that would be the other thing. This is, you've gotten a lion's share out of this already. Where'd you sell it at?
I'm trying to think. I don't remember. I think it was close to 30 and 50, 30, 70, something like that.
That's fine. You got into that gap. The volume was about the same, so I could see a good case for selling it there. I know Tom lightened up on some of his gold stocks, and you go with the information you have at the time. You don't know that the next big fish is going to go up there and start buying up something tomorrow.
Yeah.
So for the chart.
All the financials really got weak today, and I thought, gee, I guess I got out too soon. But
yeah, it's. I think you got 16.20 to go, but there's probably some stocks that have been up at the top that are ready to turn back south. I like the earlier caller from Brent that was looking at GameStop, some of these other ones.
Yeah.
I just think there's.
I like that GameStop. It was good to you. It was good to me before.
I would know it was good to you. You got $10 out of it. So I was just going to say, to me, those look. There's a lot more low-hanging fruit than getting into this one 3/4 of the way up.
All right, thank you, sir.
Okay.
Thank you.
Anyway, we had one question in the den, and that was a TLT, whether you can even get back into this thing. And unfortunately, I think you may have movements much lower out of this. This thing has come and filled every single gap that has been underneath it, and yet we have another gap down in the 96 range, and this has basically been blowing through all of them. It's blown through some previous lows out here that had higher volume. I mean, you're basically into them right now, and these things should be stopping. You had the highest volume day, I think, ever in this ETF on with 40 million shares on September 9th of 2011. So you're going to be at some level of support, but every time I think this thing's done, it goes and attacks another gap. The next one's down at 96. So we'll see you tomorrow. Same bat channel, same bat time.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.